Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Thursday, July 31st, 2014. Today folks, first of all, I want to make a follow-up on the last market report when we talked about a movement that we had in the apparel retailers. So I want to make a look to see how those stocks look out. Are there some stocks where you should have gotten out? Are there some stocks that you should continue to hold on to? And what I'm going to do, I'm going to show you also a list of the best breakdowns today, because today markets are all going down. Investors are nervous, investors are uncertain, especially concerning the weak earnings that we had from stocks like ExxonMobil, Yum Brands, and also the weak data coming out in Europe for the inflation numbers, which make investors wonder, are the ECB initiatives to actually stimulate growth, are they effective? So this is what we're going to do, follow up on the apparel, and then we're going to take a look at the best short opportunity in the energy sector, which is the laggard today. Now let's take a look at this. First of all, the apparel movement, I've talked to you about this chronicle on July 24th. So far, most of the stocks though, you're not able to take some profit on them, but they're able to resist, which means that you should continue to hold on to them on most of the stocks, because all of them are staying above their support. As I said, it was the first movement. I told you to put your stop loss, but also to go in gradually in this movement. So if you take a look at the stocks that broke out on July 24th, there was JCPenney, which broke out. So far, JCPenney is performing really well. As long as it stays above 850, it's still a hold in JCPenney. Not yet an opportunity to take some profit. At 5% or more, you'll be able to take some profit on JCPenney. Urban Outfitters, so far it's still a hold as long as it stays above 33 bucks. But right now I believe that we're gonna start and have a pause on Urban Outfitter. I think if ever you see Urban Outfitter reversing that upward trend goes below 35, you might as well reduce your long exposure there and get out totally at 33 bucks on Urban Outfitters. The Gap having a slight correction, but so far it stays above 39.37, so it's still a hold. Same thing too for Nordstrom. It still stays above the support at 67.11, so it's a hold, and Nike as well. However, there's one stock here, Foot Locker, that broke out on July 24th. Now Foot Locker broke that support, so that's a perfect example of a stock that you should get rid of today, because the stock is clearly starting a new breakdown. It's actually retaking its bearish trend. Now, concerning the other stocks I've talked to you about that were within the sideways formation, potentially on the verge of starting a breakout if the upward momentum could continue on the retailers, while most of the stocks that were in the neutral range are still within a neutral range. Those stocks include Brown Shoe, Zumiez, which is still within its sideways formation, Finish Line, which is still within its sideways formation. So far there's definitely no movement, no new cycle that has been started on those stocks. Now let's talk about the energy sector, because today on MarketGurus.tv, this is the sector where we recommended the best short opportunity. MarketGurus.tv can have access to that for free for 10 days just by clicking at the link below. And on those stocks in the energy sector, I believe that if you're not comfortable to short the sector in itself or short stocks on the sector, you could also go in with some bearish ETF. And ERY is an ETF that you could actually track. In terms of the target of the energy sector, where could it go? Well, I believe it could at least reach 95.69 on New York. So far in terms of the best short opportunity that we have in the sector, there's Kraton Performance, clearly breaking an important support, clearly maintaining its downward trend, except that it's taking 9.43%, which is a lot. So let's say I'll put my stop loss if ever I see the stock going higher than 21.42 instead of waiting until the stock breaks the resistance at 22.68. So 21.25, 21.42 instead of 22.61 for a stop loss. Niska Gas Storage clearly breaking down too. What I like is that it's also reversing an upward trend there on Niska Gas Storage. So this is why I love that short. 7% until 13.61 for Niska Gas Storage. On the TSX is the energy sector too, that is clearly breaking down. And this sector here could actually reach 307 points. So there's those two bearish opportunity, short opportunity. There's Legacy Oil and Gas, which is breaking clearly an important support. Okay, it's rebounding slightly, Legacy Oil and Gas, but if ever you see Legacy Oil and Gas going above 845 during the day, I think it's not going to be a nice short opportunity. But if it's able to stay below 845, I think it definitely could be a nice short opportunity with a stop loss around 880 for Legacy Oil and Gas, because at 880 it will reverse this downward trend. Western Energy Services, a clear breakdown too, clearly breaking an important support. So I believe that Western Energy could go lower. I have a target on that stock, let's say around 8, 9, 10 for Western Energy. So there's some potential on that stock here around this area here for Western Energy Services. So 2 stocks on the TSX to short on the energy sector, 2 stocks also on the one in New York. And as I said, there's ERY, which is an ETF that you could trade to actually trade the bearish movement that we have in the energy sector, which is the laggard today. Among the apparel retailers, most of the stocks are still a hold, but however, a stock like Foot Locker that you saw here, it's a stock that you should get out of it because it's clearly starting a breakdown. So folks, this is the list. And as I said, so far the energy sector is the sector to short with the uncertainty in the market, with investors being nervous today. And if you want more analysis on more stocks and you want to make more money, subscribe to marketgurus.tv for free for 10 days. So that's it, folks. See you next week for your market report.